what's up everyone, and welcome back to the Beginner's Guide to Investing series, where in this video we're going to talk about how to invest £100,000. Now this is part 4 of a series of videos I'm doing where I talk about investing in different sums of money. So if you guys haven't checked those videos out, I really recommend you do, because I always say if you can't invest £10,000 or £1,000 or even £100, then you're not going to know how to invest £100,000. With that said, make sure you smash that like button for the YouTube algorithm. Also, if you haven't already, subscribe to the channel so you guys don't miss out on future videos just like this one. So guys, this video is going to be slightly different in comparison to the previous ones, and that's because I'm actually currently going through the process of investing £100,000 or a six-figure sum of money myself. So hopefully in this video I try to be as transparent as I possibly can be, and also if you guys stick with me to the end of the video, I'll reveal to you some of the portfolios that I've built and some of the investments that I've made. So guys, before I get into the specifics around how I invest this money, let me give you a quick background into why I'm making this video, because it's really important. The reason why I'm making this video is because I've been in this position before, twice actually. So I've been in a position before where I've had a six-figure sum of money to invest, and it didn't go very well. The first time around I had around £90,000 to invest. I was in my early 20s, I was living at home, I was saving all my money, and I wanted to grow that money, right? So I thought I could become a part-time trader. So I started trading stocks, I started trading forex, I started investing in markets that I had no understanding about. I started investing in penny stocks. It's absolutely ridiculous when I think about now that I could even invest in penny stocks, and in the end I lost it all. I lost the entire £90,000, and it was devastating. Okay, so the second time around when I had a six-figure sum to invest in, the wife and I decided, because of the first experience I had, which was so bad, we decided just to buy our dream home. So we ended up spending around £110,000 and spend that on a deposit for our dream home. You're probably thinking, well done, congratulations guys, that's amazing. No guys, it's not, and I'll tell you why. Firstly, I could have used that £110,000 or whatever it is to invest that money and make more money, and I would have been much financially better off today if I did that. Secondly, we're stuck now for 25 years paying this mortgage off. That's a lifetime, guys. A lifetime prison sentence is 25 years. So this mortgage is a lifetime. It's almost feels like for the rest of my life I'll be paying interest and I'll be paying this mortgage off, okay? Which is not a good feeling. And the amount of interest you're going to pay, whether your house is going to be worth more than the amount you pay in the end, I have no idea. Who knows, okay? And thirdly, the restriction that you get. Say you hate your job, you want to quit, you can't do it because you've got mortgage to pay. Say you want to travel the world, you can't do it, you've got mortgage to pay. Say you want to follow your dreams or follow your passion, you can't, because initially, you've got mortgage to pay, and dreams and passions, they don't pay for the mortgage at first, right? So all these things, make it a bad investment, when you go for a mortgage for a house to live in, okay? So lessons have been learned. This is why I'm making this video today, because I want to show you guys what I'm doing differently now and what I'm doing differently with my £100,000 investment. So guys, £100,000 now, that's a serious amount of money. So we can start investing in different asset classes, okay? My risk appetite is fairly low, so the investments I'm going to talk about are going to be medium to low risk, okay? So with the £100,000 or that six-figure sum, I'm going to split the investments into two asset classes, okay? The first one, so 50% of the money is going to be going into properties. Okay, I'm going to talk about how I'm going to use that £50,000 or roughly £50,000 to essentially build some sort of property empire. Okay, the other 50% is going to go into multiple index funds and individual stocks, and I'll show you how I've built a portfolio around that and how I've built it completely tax-free. So using my and my family's ISAs allowance, I'll show you how I did that. Guys, let's talk about the property side on the investment. So I'm going to use the £50,000 as a deposit to put down on a property and get a buy-to-let mortgage. I'll then use that property to obviously rent out and gain rental income. What I'm going to do next is, after a couple of years down the line, I'm going to go back to the bank and refinance or remortgage that property and pull out my initial £50,000 investment. So what they'll leave me with is a property that I've got, rental income that I'm getting from that property, plus my initial £50,000 investment back out in cash. And then I can just go away and repeat that entire process over and over again. This is how people essentially build property empires, and not put that much of their own money in. They're just able to utilize this asset in such a great way because it's just so diverse, so versatile to use this asset in this way. So obviously there's probably a lot more that goes into doing this, into the property game. I'm very new to it. I'm completely beginning into the property game. I've bought my own house. house, but that's about it. But I'll try to document this entire process as I go with it on this channel. Okay, so make sure you guys check it out when I do that. So what I'm going to do is I'm going to start a limited company to do this, okay, because I want to take advantage of the tax benefits. And if you're going to build, a portfolio of multiple houses to rent out and to, gain income, then it's best to do it for a limited company. So I'll show you exactly how I start that limited company. I'll show you exactly how I buy the property, what kind of properties I view, and what kind of mortgages I can get for a limited company, and how I go about refinance or remortgaging towards a couple of years down the line. So I'll go through that entire process, document it on this channel. So make sure you guys stick around and check that out. Okay guys, now let's move on to the second half of the investment. We'll talk about investing in funds and individual stocks. Now, I mentioned earlier on in the video, when it comes to investing into the stock market or index funds or anything like that, then I like to max out my ISA allowance. Now, I don't do that just for myself, but I do it for my entire family. So what I do is I like to max out my ISA allowance of £20,000 every single year. I max out my wife's allowance of £20,000, and my son, we just started putting money away for him, and we can max out his allowance of £9,000. So as a family, we can invest up to £49,000 completely tax-free through our ISAs, okay? So guys, at this level, there are many brokers to choose from, but we try to keep it as simple as possible, and we use a Vanguard ISA account for our investments into the funds, and we use a Trading212 ISA account for the investments in the individual stocks and shares. Now, a Vanguard ISA account costs you about 0.15% of your total investment every single year, and a Trading212 ISA account is completely free. Now, when it comes to investing in funds, then there's a lot of choice out there, there's a lot of options to choose from, but we try and keep this part simple as well. So we like to choose funds that are 100% equity funds, okay? Now you can choose funds that are, got a mix of both bonds and equity, okay? Maybe 50-50, maybe 60-40, or whatever you feel like your risk appetite is like, but we try to keep it 100% equity because we want to get the most gains, the most returns on our investment. Secondly, we try and look at the cost, okay? So the cost of the fund. Now, index funds generally cost a lot less than, let's say, mutual funds, okay? Some index funds go as low as 0.07%. And thirdly is the risk factor, okay? We try and keep the funds that we invest in towards the medium risk level, because we're going to be investing large sums of money into these funds. So you want to feel comfortable that the money is pretty safe. So there you go. That's our basic criteria. Now let's jump onto the computer and I'll show you the Vanguard portfolio, the Vanguard ISA portfolio that we currently have. Now guys, so I've just logged into my Vanguard ISA account, okay? So let's start with here. So as you can see, we've got about £35,000 invested for our ISA account so far, and this is the basic portfolio. Now, if we start with the largest investment, which is the S&P 500 index fund, okay, and I've got roughly £15,000 invested in that. Have a quick look at the investor information. I'll tell you the reasons why I've invested in an S&P 500 based one. Now, it's comprised of large-sized company stocks in the US. So basically, the top 500 companies, you get a piece of that action through this fund. Okay, so just one fund, you get access to 500 of the top US companies. Okay, so looking at the risk and reward profile here, it's around 5. It's a little bit more risky than I want it to be. I wish it was at more in the medium risk level, around 4, but 5 is typically decent too. If we look down at the charges, now there's no charges here except for the ongoing charges for the fund of 0.07%, which is very minimal, very low for a fund like this. It's really good. And look at the past performances back in 2013, 31% return, 2014, 13% return, pretty decent returns on average year on year. A top tip for you guys, whenever you're looking into index funds or funds in general, if you just copy the name of that fund and quickly go into Google, paste it in and add at the end fact sheet, then you can actually see the individual companies or some of the companies that this fund invests in, okay? So you want to go for one that's PDF, so the official document from Vanguard. So let's quickly click on that. Let me expand this. So if we just scroll down here on their fact sheet, you can see some of the companies that they invest in. So the top 10 holdings: Microsoft, Apple, Amazon, Alphabet, Facebook. These are some of the companies they invest in. Also, if you look at the weighted exposure, it's very heavy on the IT, information technology, about 27%. We've got healthcare stocks in here. We've got this. We've got financial, industrials. So there's a good mix of different industries just through one fund. Okay, so there you have it. Now, my second largest holding is the DAX UCITS ETF, VDXX, okay? And that's around £10,000 invested. Now, this is a German-based index fund, so almost exactly the same as the S&P 500 one, but based on the German top 30 companies, okay? Now, the reason why I've gone for this is, firstly, I invested back in March when we just went through that global pandemic, went into lockdown, and the markets just crashed. And I felt as if the countries or whoever's going to recover from that whole pandemic the best is going to reflect so well on the markets. Okay, and Germany were just doing a great job at that time. They got ahead of the lockdown, and they did it very early, and they dealt with it really well. So I really thought that the markets will respond positively to that. So that's one of the reasons why I invested in a German index fund. Also, I do like the dividends. Okay, so if you look at the dividend payments right here, my £10,000 investment last quarter, I got paid £132 worth of dividends. Okay, if we compare that to the S&P 500 one of £120 based off a £15,000 investment, it's a much better percentage yield. Okay, let's move on to the next investment, which is a Asia Pacific. Okay, Asia Pacific based index fund excluding Japan. Okay, now we've got £5,000 invested in here. Now, one of the reasons why I've gone for this one is because firstly, we've got a index fund based in the US. So we've got one based in Europe, okay, for the German one. And I wanted to get one based in Asia, just so we can have a broader coverage of the globe, basically. So have even more diversification in our portfolio. Some of the countries that include in here are Australia, I think is the largest holding. Then we've got Hong Kong in there. We've got Singapore. So all the developed Asian countries. Lastly, the final one is the US equity index fund, okay, around £5,000 in that. Now I've gone for this one because this is a riskier index fund, and I wanted to put at least a small percentage of my portfolio into something more riskier, because you want to have something like that in your portfolio because you never know what could happen. It could, blow up one day. Look at the key investor information for this one, okay. This fund is comprised of large, mid, small, and micro-sized companies in the US. Okay, so micro-sized. So these are fairly small companies to mid to large companies. So there's a lot more risk involved in this one. If you can see, the risk reward profile is at 6, so it's pretty high. The charges are fairly low, only 0.1%, but past performances are pretty good. On average, between 20 and 30% on average. So it's been doing pretty well in the past. So this is the risky option. That's it. That's all the investments that we have currently with Vanguard. Now I'm going to move on to the next part where I'm going to talk about the Trading212 investments and the individual stocks and shares that we have. So with Trading212, we currently have about £11,500 invested into individual stocks and shares. Okay, so unfortunately, due to my day job, I can't exactly run through the companies or talk about the companies I'm invested in. So what I'm going to do is talk about the strategy that we use to invest in the stock market. So firstly, the first thing we want to do is we want to split our portfolio into a 40-40-20 kind of split, and that is we want 40% of our investments into high growth stocks. Okay, these are companies that are going to double, triple, quadruple in the future. Okay, have a 5 to 10 year plan. The next thing you want is you want 40% of your stocks to be invested in dividend paying stocks. And the reason why you want that is because if, like me, you're investing for a long period of time, 5-10 years, that's a long time to wait for your investment to grow and then finally sell and you to reap the benefits. Okay, so you want to have in that period some sort of income coming in. What's also recommended is every time you do get paid from your dividends is to just reinvest it back into the stock market or into your funds, because you want to take advantage of compounding, or you can just take the money and blow it, spend it. It doesn't really matter. And the last 20%, you want to put it into something really, really risky. Take a punt. Go look for a company that might change the world or might just blow up one day, might quadruple, might just just go absolutely nuts. Okay, or it could potentially flop. It doesn't matter. Only a small percentage, only 20% invest into a high risk stock. So if you do lose that money, you've got the rest of your portfolio to cover the losses. And if not, you never know, that could be the one that makes you seriously rich. So that's it, guys. That takes our grand total for our total investment into funds or stock markets to around £46,500, and that's all through our ISA. Okay, so it's completely tax free. Now I'm going to plan, or we're trying to plan to do this every single year. Okay, we'll try and do it. We'll try and automate this process as much as possible. So it's really easy with the Vanguard ISA. You can just go in there, and for each of the funds, you can just set up a direct debit every single month and just pay into that. Okay, or through the Trading212 account, they've just released a new auto invest feature, so you can go there and do the exact same thing. Or as and when you have the money, we just put it in. It doesn't really matter as long as you're making the most of your ISA allowance and you're trying to get as much benefit from investing in a long-term consistent manner. So there you go, guys. That's how I'm currently investing £100,000. Hope you enjoyed the video and hope you enjoyed the series. See you guys next time.